All right, let's answer some questions from Sunday's Market Outlook. I usually do these Wednesday morning, but the day started off interesting and it remained interesting all day long. Plus, I had to go to Toronto for a quick in and out. So here I am. It is 5:10 p.m. Wednesday afternoon. Any comments on CrowdStrike stock recovery? Do you think it's a market overreaction or something that will have long-term consequences? Um, well, I think it was an event. I think they made a mistake. I don't think they're going to make that mistake again, but they now have to pay for that mistake. How many how many companies are going to show up and say, "Hey, because of you, we lost this, we lost that. You got to make us good on that." So it's the cost of their mistake that still has to come out. The stock ON has so much movement after hours. Um, Volume drops significantly after hours, so almost all stocks have a lot of movement after hours. Buy ABR, sell calls against it, lend shares for interest, sell puts, rinse and repeat. Seems like a straightforward way to make money with ABR. ABR has been holding up quite well considering what's going on in the space. It has been holding up quite well. I do have some puts on it. I have bought some calls, longer dated calls on it, but I'm not really willing to go in heavy until I hear from the earnings call. So I am poking around at the edges, but you know, certainly not rushing into the fire. Not that I'm saying there's fire, it's just an analogy I'm using. Do you think small caps are set to outperform in the next 2 years, given the stretched rally in tech? Well, when you say outperform, outperform what, right? Usually it's in relation to something. Do you mean outperform tech? And if that's the case, what is your forecast for tech? Is it a drop of 20% over the next 2 years? So that small caps only drop 19%? That's outperforming, but still with a drop. So if you mean in an absolute sense, greater than zero, I don't know. One external event in the world could change any forecast you have. So much now depends on the election. So much now depends on the Fed. I think the market has priced in everything it can price in at this point, and has priced in sort of a soft landing, perfect glide path, everything working out. And this earnings season so far has been anything but. Companies are selling off whether they beat earnings or not. That's usually not a good sign when you have companies that do beat earnings but still sell off anyways. Um, you know, People finding fault in one little thing here or one little thing there. Um, so yeah, all I can say about small caps is they favor an environment with low interest rates, and that's not what we have right now. As interest rates come down, they'll still have to come down a significant way before small caps really start to enjoy the benefit of those lower rates. So I think on the way to small cap, I think I'd stop off at mid cap first for a while. Explain the recent spike in the Canadian overnight repo rate. Oh, I know nothing about the Canadian market. I was unaware that anything like that had happened. I don't pay attention to it at all. It's just not on my radar. Best way to set up an inexpensive negative delta hedge. I don't understand what you mean, a negative delta hedge. You want to hedge negative delta or you want to create negative delta? Um, Options are the cheapest way to do it, but I mean, without knowing what it is you're hedging or how you want to hedge it or what your goal is, I have no idea. I would just be guessing. I'd say something, you say, no, 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 I didn't mean that. And it's like, I'd guess again, no, 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 I didn't mean, There's nowhere near enough information in there for me to even begin to answer that. Any thoughts on Grupo Mexico for copper? I don't know them. Oh, 90% of trade significant Holdco discount, 40%. Uh, well, maybe they got some debt at the parent level. Three easy questions. Say no carbs. Do you also mean no fruit? No. I am using the Atkins version of this diet, not the keto version. The Atkins version does allow for fruit, low glycemic index fruit. So I have that. What is the YouTube account name of the energy guy hiding behind the green bird? Doomberg. Can you share your music playlist? Don't have a playlist. Loved Long John Baldry. Yeah, he is good, huh? But I don't really have a playlist. It's, whatever kind of strikes me as interesting. I was in agreement with you on Lamb Weston. Boy, was management guidance wrong. Yeah, they they certainly disappointed and their guidance going forward. But this is not the first time I'm seeing. I'm seeing in the consumer staples sector poor guidance. So who's buying all of these Apple devices and high-end vehicles, but not buying food? Seems just seems rather odd. On the energy sector, interesting to note the rig count is far below all-time high. Yeah, output is at all-time high. That is because of enhanced oil recovery, taking existing wells and pumping in either H2O, water, or carbon dioxide. And when you pump it in, it increases the pressure, and then you have another well over here. It increases the pressure, and it starts pushing all the oil this way through the porous rock and then up. So with enhanced oil recovery techniques, you can get a lot more out of existing wells without needing newer rigs. Got your CFA level 1 package and applied level as well. Just want to let you know it's great. Okay. How is our R&D calculated in the statement? So you spend money on R&D and you just sum it up. There is no calculation of it. It's just, okay, here's the R&D lab. Here's all the expenses for the lab. Here's the cost of it. This is the actual labor, or rather the resources needed. Everything that's needed for research. So if you have a lab, it's all the costs of the space, all the utilities that you're using in the lab, all the staff in the lab, all of the raw materials or inputs that you need, all of the equipment that you need. It's everything. OAS spreads you report in the market outlooks, are they for 20-year bonds? No, they're just on the category as a whole. Trying to find the yield on a 20-year AA corporate bond. Couldn't seem to find it on Fred. I imagine if you Google that, you can find something. As I work in an investment bank, I'm not allowed to sell puts. Only allowed to sell cover calls or buy protective puts. I plan to keep adding TLT to my portfolio and exit the position gradually by selling calls after 2 or 3 rate cuts. Any other strategies I could use given this limitation? Well, you're not allowed to sell puts. No, I don't know what else you can do. What has been your experience with CRA? How do they view your trading? Do they view it as a business and thus tax-like income, or do they view it as capital gains? It's capital gains. I'm not in the business of generating capital gains. Usually, if it makes up a significant part of your income, or a significant part of your time is spent on it, then they make the case that you're in the business of it and it should be income. It's kind of hard to do. It's easier to do if you're a day trader and you have no other sources of income. It's easy to do that. But, they have to understand that there are times where successful people generate more revenue from their investment portfolio than their job. I mean, that's not uncommon at significant wealth levels. So that's not a test on its own. The type of trading you do, I don't do any day trading. I'm not a pattern day trader. The pattern day trader is if you do, I think, 3 day trades within a 1 week period. I've you know the the days of being classified a pattern day trader for me are years in the rearview mirror. I'll tell you, I don't day trade at all. I can't remember the last time. I'm sure I have in the last year or two, entered a position, then the same day said, oh, okay, well, look at this, that worked out, and took it. But I can't remember any one specific thing. So I don't, I wouldn't light up any flags with that. I do have other sources of income, so it would be hard to say that I'm in the business of generating capital gains. Did you see the increase in housing stocks coming? You mentioned it would be sideways, so what has caused this? Good earnings. Also, are you selling puts on FCX for income? Yes, I am. I was selling puts on FCX since their earnings. And they were up in pre-market, and then they started going down. I think it had to do with their guidance. Their guidance was good. What I didn't like about their guidance is they're using $4.25 for copper. They're making the assumption that it's $4.25 a pound. And on the call, copper was below $4.25, was about $4.18 when they were issuing their guidance. So their guidance is making this assumption, but copper is below that price. So I think that's where the market said, whoa, we cry foul on this one. Also using, I think, 2,300 an ounce for gold, which is, you're tiptoeing up to the line when you start doing this. I would have much rather seen like a $3.90 or $4 copper price with their guidance, because at 418 they'd still be above guidance. Now they're going to be below guidance at 418. Depends on how long it stays here. Would tariffs have any effect on the strength of the US dollar? Well, yeah, I think it would. I think operationally it would probably I don't know, it's hard to say what it would do, because it really comes down to how willing the US consumer is to continue buying what they want to buy regardless of the price. But it's going to have an effect. What effect? I don't know, but it would have an effect. How big the effect? I don't know. I know that's not much of an answer. I don't know how big the effect is, and I don't know what direction it's going to be in, but I'm sure, but you can't not have some effect somewhere from it. I just don't know what it would be. You can make the case that it could strengthen the U.S. You can make the case that it can weaken the U.S. You can make the case both ways. To me, it's not a tradable bit of information. If Trump wins, do this to the dollar because of the tariffs. I wouldn't have a clear a clear side to land on that, because I can make the case both ways. Now, I can also make a third case that it is going to have no effect at all. Given your conviction in ABR, why not sell the January 25.5 strike puts? You can get a decent premium for them. The implied volatility on those are well over 100%. It's not uncommon to have implied volatility going very high for very out-of-the-money options. The premium, I think on the fives, the premium was 50 cents or something, but no liquidity. There was no volume on any of those. So you look at them, you say, okay, well, let's say I get in. And let's say something does go wrong and I got to get out. I'm not getting out. These are Hotel California options, right? You can check in anytime you like, but you can never leave. So you look at those, you say, if something did come up, because you do have to think that way, is that There is no such thing as 100% probability. If something did arise, um, you have to think about what your margin is going to be. So you're selling $5 puts at $13. So your margin is going to be very minimal. So the lure would be to say, well, I'll take a whole bunch of these, but then something happens and this starts dropping 10, 9, 8. Your margin on these will explode. So you'll be losing because you sold them. Now they're going up in price. Now your margin is exploding because you went too heavy on them because they seemed like such a great deal and they didn't require a lot of margin when you started. Now you have to exit them at a loss because you can't come up with money to cover the margin. And maybe it goes to 7 or something, then it bounces back up. But by that point, the damage is done. You'd be knocked out and you're out of the game. That's what you have to watch out for. Is not the end, but the path. Anything happens, it could get pretty ugly. I know ISM data is a diffusion index, above 50 expansion. After digging into the report, what do you make of this comment from Fiore? Manufacturing PMI above 42.5 over a period of time generally indicates an expansion of the overall economy. I'm unaware of this information. Therefore, the June PMI indicates the overall economy grew for the 50. Wow. Okay, so maybe he needs to make a bullish argument. And 42.5 is the point where he can make that argument. If the PMI data were worse, would he be making the argument saying anything above 40, anything above 38, anything above 35? I've never heard this argument before. Over a period of time generally indicates an expansion. What does that mean, generally indicates? Doesn't always, but generally indicates, but it's a diffusion index. How can that be? And the diffusion index is not based on some base month that you keep referring to in the past. It is the month. It is every single month. So you do it for this month and you get a 42. 50 is neutral. So it is indicating contraction. You do it the next month, you get a 42. That's not saying, no change. Because this is not the base year. It's a whole new month. It's how do you feel? And so you basically had a contraction, and then the next month is a contraction from the contraction. Then the next month is below 50 is a contraction from the contraction from the contraction. So it accumulates that way because it doesn't continually use a base year. So I have no idea what he's getting at there. Maybe he needs to make an argument, and he wants it to be bullish, so has to come up with some reason why. I don't know. Broker rules and sold puts in front of LW. Yeah, 2025 forecast seems pretty downbeat. Did you start selling calls on the stock once they are signed? Try to slowly recoup some of the losses. I sold the 7250s in front of earnings. I got $1.50. So yeah, on that set, I'm quite down. I sold the 60s for... What did I get for these three? I think I got like 330. And then I sold the 55s. And here I think I got 230. So I sold even numbers on all of these. So it would give me overall, I think, an average somewhere, considering the premiums I got for this, it would give me an average somewhere around 59 to 60. Where I do expect that I would get some kind of consolidation in around that area. This was a huge hit, followed by a huge hit on the last earnings as well. So given their forecast and where the price is right now, they're now fair valued again. So I do expect that somewhere in the 55 to 65 range, they'll tend to go sideways. They're not going anywhere, so I don't mind selling more puts because they're just not going anywhere. They're challenged, and it's the restaurant side that has them challenged, which kind of makes sense given where we are in interest rates. Is the restaurant side, sort of is taking a bit of a hit. but this is a consumer staple. This is something that I know that I can work my way out of without a problem. If this were a tech stock, I don't know where the bottom is, right? So I wouldn't step in if this were a tech stock that was trading at 80 times multiple and is now at 65 times multiple. So you take Tesla. Tesla had an ugly day, down to 215, 216. I wouldn't touch it because it went from ridiculously overvalued to extremely overvalued. So I wouldn't touch it because I don't know where the bottom on that thing is. But this is a consumer staple. It has a bottom. It's going to be scooped up a lot by value funds. The analyst targets on these are going to all be revised down. But given that it is repriced significantly, it wouldn't surprise me if the average analyst rating was either a hold or a buy, but not a sell, given that it has repriced to the 55 to 60 range. So I'm comfortable with this. These 7250s will probably be put to me sooner than later. I don't think the holders are going to wait till expiration to put them to me. The 60s and the 55s I'll have to wait for, but these will be put to me, I'm sure. I have no plans on selling any calls on them yet, because I do think that we're going to get a bit of a bounce, and if we get a bounce, I might look at the 65s, right? Assuming that I will get these, I might look at covering off those on the 65s, but you know, I'd want at least a $1.50 on the 65s. That's assuming I don't get the 60s and the 55s. There's another $5.50, right? If they're not assigned, if we stay above 60, I'd get another $5.50 on the 150. That's $7. That would put me at $65.50. So if I sold the 65s for like $1.50, a buck or $1.50, I still walk away doing okay. But I'll wait. Higher probability Fed will cut in June. You mean July? If that happens, I foresee a rally in small caps. If we assume the market probability is wrong for July, don't you think there's a trade to be made in small caps right now? It's just speculating. There are easier ways to make a bet on whether the Fed will cut rates, and I don't know that buying small cap stocks is what I would do to make a bet on a rate cut. The most direct rate cut bet I can make is duration. I get that falling mortgage rates are generally good for home builders. How concerned are you about rising inventory of new homes in the U.S.? Not that concerned. What is going on is you have homes being put onto the market, but they're being put onto the market at a price per square foot that is greater than the price per square foot that a builder can deliver at. In other words, you can now buy a new home cheaper than you can buy an existing home. So even because people who are putting their house on the market are emotional, they're not rational. So they're not going to sell for less than what they paid, and they're not going to sell for less than what they think they need in retirement, or they're anchored to a price that they saw maybe last year, or 2 years ago. They're anchored to that, so they're not going to move too far from that. So right now, if you are buying a home, a new home is cheaper per square foot than an existing home. As rates fall, more and more existing homes will be listed as the difference between existing mortgage rates and new mortgage rates fall. You got a long way to go for that. You probably got at least 200 to 250 basis points of cuts before you get there. I think this run-up in home builders is not placing as much weight on the issue as it should be. You still have, even though you have new homes coming in the market, you still have a structural shortage of housing. That if you took all the shadow demand, all that demand that will show up when rates fall, will still overwhelm the supply, and the supply will still be anchored. The sale of existing homes will still be anchored to some price they saw in the past. A builder can still always deliver a house at this point in time cheaper. What is the thesis behind utilities being in your top 3 5-year coma scenario investment? The more digital the world becomes, the more you need to move electrons around. NextEra reported earnings after the bell and knocked it out of the park. And what did they attribute it to? The rise in data centers. Data centers for AI. The rise in data centers because they use a lot of energy. And they had great earnings from just that alone. So, yeah, that's not going away. More and more stuff is going to go digital than ever before. So you need electrons. You need a utility. Based on GM stock reaction earnings, did you take any positions? I certainly did. I bought GM shares on the way down. I kept buying on the way down. Sold the 48 put, sold the 47 put, sold the 46 put, sold the 45 put. I was trying to get the 44 put. I'm laddering all the way down because I think it's an overreaction. Wasn't going to give me the 44 put today, but then Ford reported and missed, and they dropped $1.50 really fast. They dropped over 10%, and in sympathy, GM dropped down as well. Why am I buying this? Right? They said on the call that they're slowing down their EV transition. They're delaying the start of a plant, an EV plant. And for the robotaxi, they're abandoning the idea of using the Origin, and they're going to use the Cruise. Which, first of all, I think is a great idea to use the Cruise. I think that is a great short-term idea to use the Cruise, because while no foot pedals and no steering wheel is a level 4 version, there is no coast-to-coast level 4 at this point in time, and there will not be any coast-to-coast level 4 until the grid is much smarter than what it really is. You're looking at 15 years, 10 years, 15 years before you get coast-to-coast level 4. So Tesla's dream of consumer vehicles joining a fleet of robo-taxis driving everywhere, no, that really is just a dream. I'm buying this for one particular reason. The CFO, Paul Jacobson, said, given that we believe that our share price remains undervalued, share repurchases will remain a part of our strategy on a going forward basis. They are going to, by the end of the year, if they're still not getting the respect, keep in mind now, with their guidance, $9.50 to $10.50 EPS for 2024, for full year EPS. Take the middle point, 10. They're sitting at $4.46, 4.6 times. 4.6 times. That is a market that refuses to give GM any respect whatsoever. After $16 billion of announced share buybacks in the last, 7 months? After raising guidance 3 quarters in a row, after significant beats in cash flow 3 quarters in a row, the market still will not give them any respect. They're going to do another share buyback. With the amount of cash they're spitting off, if the market is not going to give them a fair share price, they will give it to themselves. I'd look for another $5 to $10 billion in share buyback. They have a share count of 1.14 billion. And on the call, they said they want to get that under 1 billion. So you still got, about another 11, 12, 13% of shares that need to be bought back. They're going to do another share buyback. So I'll own it. I will own it. If we think that this is 56 or 55 to $60 billion valuation, you get your share count down to 1 billion, you're $55 to $60 on the price. And if they're going to get that done by the end of the year, which I think they have a good chance of getting that done if the market's not going to show them the respect, you're 55 to 60. And then if the market still shows them no respect, I think they'll keep doing it. I think they'll keep buying back shares. They'll go from 1 billion, let's say, okay, well, let's get them down to 900 billion now. But this is a beautiful value play. I don't know why they're not being taken out by another bigger, like, why doesn't Tesla take them out? I mean, how much productive capacity could you have right away? Take them out. And if you're looking for a cash cow, you've got the ICE side that's a cash cow spitting off significantly more cash flow than Tesla. Significantly more cash flow than Tesla. And you telling me that you can't use Cruise for something? Suddenly you already have a robo-taxi business as opposed to promising something way off in the future. Right? At 55, 60 billion, Tesla's sitting on 30 billion of cash. They could buy half of it right then and there. So, yeah, no, I'm going to keep buying GM shares at this point. They're going to keep buying back stock. I'm going to keep buying their stock. Would you consider Kraft Heinz a good stock to write puts on? I did, but very small because I'm not really familiar with it. But of the consumer staple stocks that I've been selling puts on, they have not been working out as a category. Consumer staples has just been, you'd think that they would, but not so much. For Canadian PPI, what could explain month-to-month drop yet significant year-over-year jump? Revisions to prior months could do that. I think copper and utilities, don't they share the same risk industry factors? No, not really. Utilities make money based on the amount of assets they have. So they increase the amount of assets. If you're going to increase the amount of assets, utility assets, how are you going to get that done without copper? There's going to be copper in there. So I don't know that they face the same risk factors. If you have a massive supply in copper, yeah, copper miners would suffer, but utilities would still be increasing their asset base. So they may have a correlated, they may be both correlated to the price of copper, but utilities are based, the amount that they make is based on the size of their assets. BOC just cut rates today. Where do you think they would stop ultimately? I think you have 50 more basis points this year from Bank of Canada. I said way early in the year, I think you get 100 basis points from Bank of Canada this year. We're 2 in, 2 more to go. Small cap rallying. From business cycle perspective, economies in slowdown phase, market should be moving to lower beta. So the question is the small cap enthusiasm, why? As if rate hiking cycle starts and we are in early recovery. Well, I don't know that you can be in a recovery from a contraction you never had, right? How can you recover from something you never suffered from? Obviously, the valuation on small cap was suppressed. Other than that, it was a bear market rally. I don't know if the valuation was suppressed in as much as it was correct, and that the valuation on large cap was excessive, right? I think the valuation on large cap was just excessive. Have you sold puts on Oxy or T recently? I have, actually. I have sold the, let me see if I can remember this now. I sold the 60 August puts. Forget what I got for those. I also sold the September 6250s. Got some nice premium on that, and I'm looking at the September 5750s. If there's any more weakness on Oxy. You had oil inventory reports today and another drawdown, big drawdown in oil inventories. That is supportive of oil prices. So I'm comfortable selling puts on Oxy here. On T, I did. I went out to September and I did a risk reversal. I sold 17 puts and I bought 20 calls. Went out to October, sold 16 puts, and those paid for 21 calls. And this was after Verizon's earnings on Monday. This is in the money. I think it's almost $3,000. I got these, by the way, for free. They cost me nothing because AT&T had a skew like this. Verizon came out. AT&T skew went like this. right? So suddenly the put rose in price to completely offset the price of the call, as opposed to it, being higher by the 1 month risk-free rate, completely offset the call. So I got those for free. Same with the October's, free. I got 100 of these and 100 of these. So yeah, and then today, AT&T. Thank you very much. Let's see. Signed up for the applied 440. Can you show us where your trades will be on the site? They'll be within portfolio construction in a new folder. I just don't know what I'm going to call it yet. Mentioned that Trump is not going to be concerned with keeping spending low and reducing the debt burden. Well, I would agree that this is typical of a first-term president on both sides. Do you think that will be a president entering a second term? Generally speaking, they would perhaps be less fiscally reckless, as they don't have to cater to various lobbyist interests. Well, the third term is the vice president, who then has 2 terms, and the vice president's third term would be in turn, that person's vice president. You got to keep the party going, right? You got to, so the second term president can't just say screw everything. It still has to be concerned about, the party winning again in the next election. And the senators and the congressmen that are within that party would also be pushing the president to also say, hey, don't forget, we got to get reelected. Maybe you don't, but we do. So might get more pushback from their own party in terms of getting things done. Because it really is less about doing the right thing for the country, and it's a lot more about doing the right thing for the party. And even sometimes it's less about doing the right thing for the party, and it's doing the right thing for me, myself, and I. Why does Trump want a lower dollar? I don't know. Why does he want anything? Right? He just, if the dollar were weak, he'd be saying we need a stronger dollar. If the dollar is strong under Biden, we need a weaker dollar, because that's the worst thing that you could have. If under Biden you had if the sun were shining every day in a balmy 70, he'd say, that this is the worst kind of weather you could have. Look at the disaster of the weather this person is. Trump says whatever the opposite of whatever the guy that he's going up against happens to have, right? Or he just makes stuff up. Drill baby drill. Meanwhile, U.S. oil output has never been higher, and no country ever in the history of the planet has had more oil output than the U.S. has right now. So, drill baby drill for what? It's the CEOs of the oil companies that would have to drill, and what they're all saying is, no, we're good. This enhanced oil recovery is good. We could drill more. We're just choosing not to. It's not as if they're being held back in their drilling, saying, oh, if we could only drill, we could produce more oil. It's like, look, we're consolidating so that we can shut down the amount of drills we have. But, drill baby drill. Let's, make the other side, make it look like the other side's holding back. And yay, the crowd cheers, because the crowd's not going to look it up. They're not going to go home and say, oh, wait a minute here. We're drilling a lot of oil. They're going to go home and say, yeah, Trump's going to drill. That means jobs, and no, it doesn't. You say, okay, companies, go ahead and drill, and the CEOs are going to say, but we're good. Thank you. We're good. There's plenty of oil out there, right? So why does he want a lower dollar? Only because it's higher. If it were lower, he'd want a higher dollar, right? You mentioned you're expecting to see 3 rate cuts. I assume you mean 75 basis points. Yep. Whether that's once off or piecemeal. Oh, it wouldn't be at one time. It would be 325s. It would not be at one time. Unless something really, really broke hard and fast, it wouldn't be at one time. How much attention you pay to Harvard leading indicator of remodeling activity? First time I'm hearing about it, so 0 attention. I don't believe you mentioned it before, but it seems to be released quarterly and gives a good indication of current near-term owner-occupied renovation projects. And if it's released quarterly, well, so does Home Depot. So does Home Depot and so does Lowe's. Give us a good indication on the current and near-term owner-occupied renovation projects. Right? Another good indication of it are HELOCs, home equity lines of credit. Any flaws in this indicator you've heard of? Never heard of it. Are you taking advantage of the CrowdStrike sell-off? Nope, because they got to pay for that. They got to pay for it. What do you think about small cap value? There's a lot of questions about small cap. What are some good ETFs for this? Any small cap ETF? IWM, IJR? Thinking of selling puts on this. I think if I had to bet for the next 2 years, small cap, mid cap, or large cap, small cap would still be at the bottom of my list. Mid cap would be second, large cap would be first, because I do think that we are in a period of large firm capitalism, and the more digital you become, the more large firms are better positioned for that kind of thing. They have much lower costs of capital. They can outcompete any small firm in their space. They have, when I say much lower cost of capital, much lower debt costs as well than small cap firms. So as a group, if I had to bet, I'd be betting large cap. And right now, for the next 2 years, if I had to bet, I'd be betting value. Large cap value is where I would want to be. That's not saying I wouldn't have any mid cap or small cap exposure, but if I had to rank them, large cap value, mid cap blend, then small cap. Well, small caps are usually growth. You don't see too many small cap values, just usually growth, but probably profitable small cap, so S&P 600. Not sure if anyone asked this already in previous weeks. How do you feel about Trump policy, re-tariff, and tax cut affecting inflation? Lots of talk about that, how it affects inflation. Nobody really knows if it's going to affect inflation. Nobody knows. It's the easy thinking is, well, you put a tariff on something, it's going to cause inflation once. It's going to cause inflation once. So let's say something's coming in the country and you say, okay, 20% tariff on it. It's not 20% and then the next month 20 and the next month 20 and the next month. It causes it once. So that's it. And then so you have prices here versus prices here. There's inflation. Prices here versus prices here. We're back to no inflation again. So because of the way it's measured, it'll cause it once and then it'll be over. But usually if there's a tariff on there, what it forces the importer to do to keep their market, because it's a large market, this wouldn't work in a small market, but in a large market, the importer would look to lower their costs of getting into the market to offset the tariff. So if you put a 20% tariff on something, prices may only go up 5% because the importer is willing to take a bit of a cut on the price to keep the market. I know you previously said a few times you believe the path forward is back to zero rates. I do. But do you feel his policies will be inflationary? No. No, I do not. Well, I don't really know. I don't even know if he'll get done what he wants to get done. He says stuff he'll tell everybody in the crowd exactly what they want to hear. I'm going to create jobs. You're never going to see jobs like this before. We're going to deport the most amount of people. We're going to get all the illegals out of the country. You got to come in the country legally. We're going to have the strongest economy with the best stock market. Housing prices are going to be affordable for everybody. Everyone's going to make a lot of money. He tells everybody, this is here's all the good, wonderful things you want to hear. Everything's going to be good and wonderful. That's not true. That's really not true. Everything's not going to be good and wonderful. You're not going to get done all the things that you say. So, a lot of this is just talk on the street. Now, that doesn't mean that he's not going to ruin some lives. If he doesn't get what he wants, he will. He'll ruin some people's lives. But, it comes down to what kind of a mandate he has. Does he have Senate, Congress, and the White House? If so, then, yeah, things could get pretty ugly. But if it's split, I don't know that. I don't really know that he's going to get done all these crazy, wild things that he wants to get done. But he says he wants to do them. So the extending the tax cuts, that I think is if he wins, that's in the books. That you can count on. Tariffs on stuff coming in, I'm sure some people somewhere will say, look, here's the effect it's going to have here, and here's the effect it's going to have there. That when he starts to think about the reality of it, maybe it's not going to be, everything he thought it was going to be. I don't know. He's not a thinking man. So if there's somebody out there that he can spite, he's the kind of guy who's probably absolutely willing to destroy the country just to ruin somebody else's life. If he can destroy a life that he wants to destroy, he will. And I don't know that he would feel much about destroying his own country to get that done. Yeah. Is there an app or something to access the applied level? Not yet. No. What caused the significant decline in copper prices in 2015, despite the steady growth in copper demand and consumption and no economic recession? Well, you had no shortage of copper. You had a fairly balanced market, if not a slightly oversupplied market, but there was no shortage in copper. And then there was a belief that it was too low for too long. That there was warnings all along that, listen, if you are going to be moving to EVs, you're going to need more copper. But it was the slow crumbling of the housing market in China that really did it. That sort of gave the illusion that the big demand in copper was over. Does the current environment also share the same price volatility risk in the absence of a recession? I don't think so. I think copper held up quite well. The last couple of years, getting down to maybe 350, that would be about it. As opposed to, going down towards the 250 mark, it held up quite well in the mid threes to 4. What is the option settlement price on SPY? I don't know. My sold call expired out of the money based on the closing price at 4 p.m., which is good. However, the option market is open till 4:15, and I could still buy or sell options for strikes that are not going to be exercised based on 4 p.m. If the price of the option assignment 4 p.m. to 4:15, if the market hence still exposed to volatility. No, there is a closing price. What happens after the market doesn't affect anything, but there is a closing price. If you see S&P 500 reaching 50-day moving average, it did today. It did. And now you are overweight of the 2% versus neutral. What does that mean? Overweight of the 2% versus neutral. Would you rather increase equity or decrease it in the hope of real? I have no idea what you're saying here. If you see the S&P reaching the 50-day moving average, and now you are overweight of 2% versus neutral. What does that mean? Overweight. Okay, let's just say you're overweight. Would you rather increase equity or decrease it in the hope of a real correction? Oh, I see what you're saying. If it hits the 50-day, I don't know. That's the market. Do you think you're going to get a 10 to 20% correction? 20 without a catalyst? I would think it'd be hard to get 20 without a catalyst, and I see no real catalyst. Maybe earnings might cause a well-needed correction, but come on. We kept hitting all-time high, but earnings weren't. So you had PEs that were just moving up and up and up and up and up. You needed a correction. So yeah, maybe you get 2%. But I don't know what this overweight of 2% versus neutral is. I don't know that I would try to get cute by jumping in and out and trying to figure out where the market is going. I would I would say I feel comfortable at this price if I have to hold it, and that's where I would be. MicroStrategy is doing 10 for 1 stock split August 7th. Do you think this will enable short selling? Eh, you know, I think they saw two other companies do a 10 for 1 and get rewarded. So he said, hey, why don't we get in on some of that stuff? We're a cult stock, and let's do a 10 for 1. Let's see if we get rewarded as well. I don't know. It's not a real stock. In my opinion, this is nothing more than a belief that you have leverage on an imaginary product, on an imaginary thing that's made up of zeros and ones that disappear as soon as you turn the electricity off, right? I mean, I don't even think this is a real thing. It's just a made up thing. It's an imaginary leveraged play on a vehicle for criminals, run by, dare I say it, criminals in the organization themselves. So I don't know. I don't know. I just looked at IBKR options change for SPY, and there's some decent premiums at 50-70. 50-70 puts, premium 1.1, and margin required is really peanuts. Is there any reason why you'd not want to sell puts on this? Well, I don't know what month you're looking at. I don't know how far off into the future that is. I don't know what you think peanuts are. $1 is just, that's $110 at 50-70. I'm not sure what you feel peanuts are, but what is the return on capital over the period of time? If it's taking you 6 months to earn $110 on the capital you're putting up, I don't think so. Am I right to assume that Vegas signed one contract that's 100 shares of SPY? Yep, that's over 50K of cash needed in one go. Pretty much, yep. When you say you sold FCX puts on dropping trend 47, 46, 45, 44, how many contracts do you per one price increment move? Is your strategy when stock is down? It depends on the stock. With FCX, I used 25s, 25 at a time on the way down. GM, I'm using 50. And below, when I hit 44, I'll be moving to 100, 44, 43, 42. Depends on my conviction of what it is. Sometimes, if I'm looking at a stock and I've never sold puts on a stock before, I'll go simple. I'll go 10 just to get a feel for how the stock moves, because every stock has a kind of a clientele feel to it, right? So you want to see, well, how does it move? How does it behave? And the easiest way to do it is to have money on the line, so you see the P&L of it. So if it's my first time with something, I'll do 10. If I'm comfortable with something, I'll do 25. If I really like something, I'll do 50. If I have high conviction, I'll do 100. And if I really think the market's got it completely wrong, I'll keep going higher and higher. So that's what I did with CapREIT. CapREIT hung around the $43 mark for way too long, and I said, the market's got this wrong. The Bank of Canada is going to cut, and the net asset value of this thing is $55. The market has got it wrong. I had 600 puts across. I had 300 alone at the 46 for July. By the way, all of those puts, all the puts I sold, none of them got put to me. $98,000 was all mine out of that. None of them got put to me. It depends. It depends on what I'm doing. For me to sell one or two puts on something, that doesn't make any sense for me. It doesn't even move. It's just more of a waste of time than anything. It's got to be a number that makes sense. If I'm introducing a new stock into my watch list, I'll start with 10 just to get a feel for it. If I like it, I'll add to it. If I don't, then that'll be the last time I do it, right? Until I maybe I see it somewhere else, or the market changes, or the sector becomes in favor, or the stock has, some kind of, significant move from wherever it happens to be. But I usually do them either in 10s and 25s and 50s or 100s. How about OIH? Trump wants to expand oil production. Doesn't matter if he wants to expand it. It's the companies. If the companies were constrained, saying we would drill more, but because of regulation we can't, then I would say, yeah, OIH. But nothing is stopping them from drilling more. They choose not to. So even if he says drill, baby, drill, off you go, they'll say, yeah, but we're good. So no, I don't know that there's much excitement for oil services now. Do you think housing stocks are still worth going long, or is it too late? I think they've had a great run. I think they put up some good numbers and had a great run. I would look for a significant correction in housing stocks before I go in. That's just me, because I think there are easier fights to win. What is your opinion on potential significant devaluation of the dollar in the event of a second Trump term? Well, who's going to devalue it, right? What would Trump do to devalue it? The Democrats wouldn't do to devalue it. What is going to devalue the dollar is lowered interest rates, and inline performance on GDP. In other words, other countries start playing the capitalism game and start doing well. Right now, it seems like only the U.S. is surviving, and it's questionable why. Some of the data I get are at such odds that you look at earnings in one category where it shouldn't be dropping, and then earnings in another category. So, well, hang on a second. If everyone's pulling back on food, why are they buying all of these luxury items? This is not. I don't get this. It's quite odd. But then again, if you gotta pay for insurance, if you gotta buy new vehicles, if you gotta buy a house, pay for rent, you probably can't afford food anymore. Maybe that's what's going on. Any idea how to hedge the cross euro US? Well, yeah, futures. I mean, it's not a cross. That's not a cross. That's a major pair. Euro US is a major pair, not a cross currency. It's a major pair. So you can hedge it in the spot. You can hedge it with futures. Would you mind adding some comments on the decision of Biden to resign? Well, I mean, it was the right thing to do. He didn't resign, by the way. Just to clarify that, Biden did not resign. He just said, I'm not going to run for a second term. That's not resigning. That's just not running for a second term. Now, a lot of people in his party want him to resign right now, so that Kamala Harris will be the president and will run as a president, as opposed to having never been in the office. Then she could say that she's been involved in some decisions, that she is the president, she is the incumbent. But he hasn't resigned. He's just decided not to run again. Are you going to introduce any other position? Not really. Not until I see how they're competing with each other. Biden in the polls, Harris, Trump, and then Biden just started falling, such that Harris had better poll numbers than Biden, simply because Biden dropped. Trump is still way up here above Biden. Now we're hearing that Trump has lost some of his luster and Harris has gotten a bit of a bump, so it's such that she's just eking out Trump at this point in time. Raised a shitload of money. So I think a lot of votes that might have gone for Trump because they couldn't vote for Biden might be saying, well, you know what, why don't we can vote for Harris, we just can't vote for Biden. Now there's a reason to vote Democrat again, even if you're not totally in love with Harris. It's just that you couldn't support Biden, right? But let's keep in mind, Harris competed against Biden 4 years ago to be the nominee and lost. And Harris was appointed not as the most qualified person, because Biden announced ahead of time the gender of the person he was going to hire. So we can only say she was the best qualified woman. He did that to her. He should have just kept his mouth shut, but he did that to her. Look for the Trump campaign to paint her as the woke candidate. As far as Harris goes, her benefit is she did not have to win the nomination by appealing to the progressive left and saying things that could be used against her, right? She didn't have to do that. So now she can run as a centrist and screw the progressive left. She doesn't have to appeal to the progressive left at this point because she will be, if she is the nominee, then she won't have to say stupid things in public that the Trump campaign can use against her, like she believes in 157 genders. She doesn't have to say stupid stuff. So she has that going for her. I don't know. I think Trump would be wise to avoid a debate on this one, but Trump doesn't fight fair. He does not fight fair at all. He will throw mud. He will throw mud at her, and it will show up. So I don't know. It's an election again. It's a fight again. It wasn't just kicking an old man when he was down. It's kind of a fight again. So I don't know what the trade would be on this one. Either way, no matter who wins, deficits as far as the eye can see and growing debt, which means zero line for the Fed before you get to a crisis. The Fed will have to go to the zero line. It's still a duration play. Surprised not to see ABI short puts as part of your trades this week. Not yet. Are you expecting more downside? I'm hoping for more because, as I said before, I don't want to buy ABR at a fair price. I want to steal it. So I'd like to see it take a dip down. I thought today it would, being that Carson Block was back talking about, mortgage REITs are in for a hell of a lot of pain. And with BlackRock canceling the dividend on its REIT mutual fund, mostly because of office exposure, I thought ABR would take a dip down. It was mentioned a couple times on Bloomberg this morning, and nothing. It held its net asset values around 13 to 13.10. It held it, so it was like, well, it's hanging in there. New industries, resorts and casinos. Sounds like almost anything will perform well during rate cutting cycle. Yeah, sounds like it. I believe the Fed has no choice but to cut at least 75 basis points every year until we get close to zero. The economy will also likely perform well. Will tech still outperform based on current valuations? Anytime you ask me questions about the future, it's always, I don't know. That's a good question. I don't know. I can make an argument both ways, which means that I'm neutral on something like that. If I can't make a one-sided argument, then for me it's like, I don't know. It seems likely that duration, utilities, consumer discretionary, small caps, and banking outperform QQQ and SPY. I would remove consumer discretionary and small caps from that. I wouldn't say it's likely. Maybe they will, maybe they won't. I wouldn't say it's likely. Makes me wonder what should underperform in a rate cutting cycle. Well, it's hard to say what would underperform in a rate cutting cycle because usually rate cutting cycles happen with significant economic deterioration. From a bout of demand-driven inflation. We haven't had that, so it's hard to say what would underperform this time. Usually what underperforms are industrials and cyclicals. They tend to underperform because they're more tied to the economy than the rate-cutting cycle. Could we see inflation come back with rate cuts due to less taxes? No. Regarding valuation, I'm dismissive of inflation coming back. I'm dismissive of it because it was a supply issue, and we're going back to where we were before, where you have, especially in asset intensive industries, more capacity than demand. Even Musk said that on his call last night with Tesla. He says we are not We are not supply constrained, we are demand constrained. So we're building this out and building that out in the meantime. He's demand constrained, meaning the demand isn't there, but there is no supply constraint. And the auto industry is entering its phase of overcapacity. GM mentioned that. I haven't listened to Ford's call. Um, we are same with shipping, ocean shipping. After having done that, it is entering its phase of overcapacity in the next couple of years. There, especially in container shipping, a lot more ships coming online than demand. Valuations for S&P 500. I think it's moving higher as tech takes on more weight within the S&P, since they usually justify higher PE. Perhaps the valuations are not expensive as it seems. Mag 7 minus Tesla are achieving impressive growth despite the size, and I don't believe it can be sustained forever. Nope. No, and this earnings cycle is kind of showing that, right? Thoughts on Trump's new VP, J.D. Vance? Don't know him well enough. I watched a TED Talk with him. It was from one of the regional TED Talks. I think it was New York. It was up, like, it's on YouTube. He did it quite a few years ago. Yeah, it was, I mean, he didn't strike me as a crazy, right? He seems to understand the business tech based on his experience working with Peter Thiel, and yet he seems to back the likes of Lena Khan, who is hawkish towards M&A, and that is mostly because of his roots. As more of an economically oppressive upbringing, you will sort of have a hostility towards excessive success. Personality-wise, based on past speech, I think he's calm. Yeah, composed, thoughtful, kind, and balances out Trump. Yeah, I think that's based on his TED Talk. I got that impression that he's a rational person. I can't imagine Trump doing a TED Talk. No one's ever heard a talk like this before. I've been hearing things that it's the best they've ever heard. The TED organization was telling me that no one's ever done this before. First time ever in the history of the, I can't imagine him doing a TED Talk. I want to invest in contemporary Amperex technology. Oh, for the battery maker. Chinese company promising tech on top of that. I see its name popping up important places. Yeah, it's a supplier. I think it's a supplier to Tesla as well. I did surface level research, but could not find a way to invest in the company. I found the ETS, but none with a major holding in the company. Can you please tell or brainstorm a way I can invest in the company? Depends on where it's listed. I think there are two listings, two exchanges in China. One of them is for Chinese residents only. You might not be able to invest in it outside of the country. What am I doing wrong with selling puts? No idea. My underlying has gone up, but the put seems to be negative on IBKR. I don't mind owning the underlying. Break even was 298, and underlying now trading at 4. I'll go through the ass of your video options again. Is it the IV causing this? Well, if the underlying is going up, but the put price is going up at the same time, then that is implied volatility that is going up at the same time, yes. Do you think tax cuts and deficit spending and reshoring nationalism, pulling back from globalization in another Trump president will soon be inflationary? Or do you think that longer-term trends of tech and aging population, decreased consumption will overpower these? I think Trump says a lot of stuff without thinking. I think he says whatever he thinks the audience wants to hear. I think he says what he believes the audience wants to hear. Tell them what they want to hear. Tell them what they want to hear. I don't know that most of that stuff will ever get done. I think there's some things that he has his eyes on that are going to get done. I think probably 25% of his time will be spent on getting even with people who have wronged him everywhere. I think 25% of his time will be there. I think 25% of his time will be spent on figuring out how to enrich himself and his family. and then 50% will be spent on listening to other people tell him what needs to be done. He's not a reader. He's not a thinking man. He'd rather not trouble himself with small little details. He'll be at Mar-a-Lago golfing every weekend. I don't know why people people vote for him, but I guess you can't vote for the other side, so I can understand that. If we take him at his word and we believe that he can get everything done that he says he wants to get done, I don't know that inflation is going to be your problem as much as economic deterioration would be the problem. This would lead to massive unemployment. It would lead to a significant drop in demand. It would lead to a loss of competitiveness on a global scale and capital flight. That inflation would be the least of your problems if he did everything that he wanted to do. If we took him at his word and we said, okay, he's going to do all these things, inflation will be the least of your concerns. I've listened to the Rational Reminder podcast and more the topic about the impact of passive ETFs in market prices. What is your opinion on that? Well, a passive investment is valuation agnostic, right? So you buy the SPY, you're buying a stock at a price. You don't care, you're not, most of the money going in that doesn't really care about what the weighting is. That 10 stocks make up 35%. Well, every dollar that goes in, 10 cents goes to the top 10 stocks. 35 cents of every dollar goes to the top 10 stocks. It's not the person making a decision to buy those stocks at that value. They're just buying the portfolio, the S&P 500 portfolio at the price that it is, and that's it. So yeah, it can, because it's cap weighted, more of the money will go to the larger cap stock. Is there significant impact on many young people saving in low cost ETF? Yeah, well, that is a problem, because you do get these extremes where the big companies just keep getting bigger because they're in the index and you're buying in proportion. Why do you call it debt when the sovereign has a monopoly over the currency? So what if you have a monopoly over the currency? Well, what else would you call it? In other words, so long as inflation is 2%, who cares what that... Oh, modern monetary theory. Let it be 300 trillion, who cares? Well, as long as you can get your share of it and get out of the country before everything falls apart, sure. That doesn't work. That doesn't work. So I want you to lend me money. I'm going to sell you a bond. And I'm telling you straight up, I'm going to print and print and print and print and print. And you're going to say, well, what am I going to give you money for? I say, don't worry, inflation's only going to be 2%. But who cares what inflation is going to be? Let's say that you're outside the country and I want to borrow your money because there's no savings left in my country. So I go outside the country and I try to borrow money. They say, are you out of your mind? Are you out of your mind? I want 43% interest. I want 87% interest. Given the amount of debt you have, there's no humanly way possible you can pay it back other than to print more money. I'm not lending you money. Well, then it's over. If you can't borrow from one credit card to make a payment on another credit card, as soon as you can't get any new credit cards, it's over. It doesn't work. It's still debt. It is still debt. You can't just print and print and print. I think you've been perhaps listening to too much modern monetary theory. That stuff is bullshit. It's just pure bullshit. FX earnings released, they beat estimates, don't know why the stock is down. Yeah, I think it has to do with rising inventories in China. And another issue with China, they imported the most commodities, I think, in the last quarter. They're just stockpiling commodities. Inventories are really high. That if they decide that, okay, we got enough now, and they stop buying, where's the demand going to come from? You got to have some demand coming in as China stops buying. Not only that, their guidance was based on very high prices for gold, for molybdenum, and for copper that may not be in there. It would have been better if they issued guidance at lower prices. The market did. The market just said, well, we're just going to use lower prices for your guidance. Wait for ASML to consolidate the low and then sell at the money puts. ASML, yeah, I think that's a good play. Trump doesn't like Vance, but Peter Thiel and other donors want him on the ticket. And apparently so did Trump's son. And that's the end of that.